The question that shouldn't exist. If every country on Earth is in debt, who exactly are they in debt to? Think about that carefully. Debt, by definition, needs a creditor. Someone on the other side of the ledger. Someone who is owed. But when the United States owes trillions, China owes trillions, Japan, Europe, Africa, South America all owe money. Who is rich enough to be the lender to the entire planet? It sounds like a paradox, a financial mystery that shouldn't exist. And yet, global debt today is over $300 trillion, more than 3 times the total value of everything produced on Earth in a year. So tonight, we're going to follow the money, not with slogans, not with conspiracy shortcuts, but step by step through history, systems, incentives, and power. And the answer is far more unsettling than a single country, a single bank, or a single villain. Setting the stage: money before debt. To understand global debt, we first need to understand what money actually is. For most of human history, money was simple. Gold, silver, grain, livestock. You couldn't create it out of thin air. You had to earn it, mine it, or grow it. Debt existed, but it was limited. If you borrowed gold, someone else physically lost access to that gold. That constraint mattered. Everything changed when money stopped being a thing and became a promise. The birth of modern money. In the 1600s, goldsmiths in Europe noticed something important. People rarely came back to claim their gold all at once. So goldsmiths began issuing paper receipts, claims on gold that circulated as money. Then came the temptation. What if they issued more receipts than gold they actually had? Thus was born fractional reserve banking, the ability to lend money that didn't fully exist. This wasn't fraud. Governments legalized it. And once money became credit, debt stopped being an accident. It became the foundation. Origins: debt as a tool of power. Fast forward to the early 20th century. World War I devastated Europe. Nations needed massive funds to fight modern wars. Taxes weren't enough. Gold wasn't enough. So governments borrowed on a scale never seen before. By the time World War II ended, the world faced a problem. Currencies were unstable. Trust was shattered. Debt was everywhere. 1944, Bretton Woods. In a quiet town in New Hampshire, representatives from 44 countries met to redesign the global financial system. The solution seemed elegant. The US dollar would be backed by gold. Other currencies would be backed by the dollar. Stability through hierarchy. This made the United States the anchor of global finance. But even then, the seeds of the debt explosion were already planted. The rise, when debt became infinite. By the late 1960s, the US had a problem. It was running huge deficits. Vietnam War, social programs, global military presence. Foreign countries began asking an uncomfortable question. Do you really have enough gold to back all these dollars? The answer was no. 1971, the Nixon shock. President Richard Nixon made a historic decision. He ended the dollar's convertibility into gold. From that moment on, money was no longer backed by anything physical. It was backed by trust and law. This was the birth of fiat money, currency that exists because governments say it does. And here's the key consequence. If money can be created without a hard limit, so can debt. Governments discovered they could borrow indefinitely. Central banks discovered they could create money to buy government debt. Banks discovered they could lend exponentially. Debt stopped being a temporary tool. It became the operating system of the global economy. The breaking point, when everyone owes everyone. By the 2000s, global debt was no longer just government debt. It was household debt, corporate debt, student loans, credit cards, mortgages, derivatives built on top of other debts. Debt stacked on debt on debt. 2008, the system cracks. When the US housing market collapsed, the world learned a brutal truth. The financial system wasn't built on money. It was built on confidence. Banks weren't lending savings. They were lending leverage. When confidence disappeared, the entire structure froze. Governments stepped in not to reset the system, but to save it. They bailed out banks with newly created money. Debt didn't disappear. It multiplied. The fallout. So, who is the creditor? Now we return to the original question. If everyone is in debt, who is the creditor? The answer comes in layers. Layer 1. Countries owe each other. Yes, the US owes China. China owes Japan. Europe owes investors. Pension funds, insurance companies, sovereign wealth funds all hold government bonds. But this is just circular debt. No one escapes the loop. Layer 2. Central banks. Central banks like the Federal Reserve, ECB, Bank of Japan hold massive amounts of government debt. But central banks are not external entities. They are extensions of the state. So governments are effectively owing themselves. That's not a real creditor. Layer 3. The real creditor. The true creditor isn't a country or a bank. It is the future. Debt is a claim on future labor, future taxes, future productivity. Every dollar borrowed today is paid by workers not yet born, services not yet provided, resources not yet extracted. Debt is time travel, and the bill always arrives. Failed fixes, kicking the can forever. Each crisis leads to the same solutions. Lower interest rates, more borrowing, more stimulus, more money creation. These fixes work temporarily, but they require even more debt to sustain growth. This creates a trap. Raising rates crashes the system. Lowering rates inflates bubbles. Printing money devalues savings. There is no painless exit. Modern parallels, the pattern repeats. Today, global debt exceeds $300 trillion. Many governments can't repay without new borrowing. Central banks are trapped between inflation and collapse. We've seen this movie before. Ancient Rome debased its currency. Weimar Germany printed to survive. Every debt-based system eventually resets, not because of ideology, because of math. Final takeaways: 3 truths. 1. Debt is not evil, but unlimited debt is fatal. Debt can build bridges, educate generations, and create growth. But infinite debt in a finite world always ends the same way. 2. The creditor is time. We are borrowing prosperity from tomorrow to survive today, and tomorrow eventually says no. 3. The system depends on belief. Money works because we believe it will. When belief breaks, everything breaks. A warning and a question. No system based on endless debt has ever lasted forever. The question isn't if this one changes, it's how and who pays. Will it be inflation, a reset, a new digital system, or something history hasn't shown us yet? Call to action. If this video changed how you see money even slightly, share it with someone who still thinks debt doesn't matter. Subscribe for deeper breakdowns of systems that shape your life quietly, invisibly, and relentlessly, because the most dangerous truths are the ones hidden in plain sight.